Another one which I'm not going to sugarcoat it, I don't like this product at all, is there's a bona fide sale clause in this particular mortgage. So what that means is you can't actually come out of this mortgage without selling your property.
Wow. Hey everyone, it's Lawrence back here with Remax Realtron, here again with Lucy Gagliardi, a mortgage agent with Oz Capital. Thanks for joining me today, Lucy.
Thanks so much for having me, Lawrence. It's great to be here. Hi everyone.
Hey everyone. Today we're talking about something like 5-year fixed mortgage, where a lot of people always ask, hey, can you find me a mortgage agent with the lowest rate? Because, I'll probably save a lot of money on interest and that kind of thing. But that may not be the best trade-off, so I just wanted Lucy to just give more detail about why you shouldn't necessarily just be looking for the lowest rate. Lucy?
So obviously everybody's objective or everybody's goal is to have the lowest rate possible. It's my goal as well. I want to make sure, I really don't want anybody to pay any unnecessary interest, especially in a mortgage. There's a lot of money we're spending every month, and so obviously that's a very important factor. It should never, never, never be the most important factor. There are so many different products out there, so many different mortgage products that you can look at basically. So while rate really is important, if you're looking at the lowest rate, you're looking at what's called a no-frills product or a low-rate basic product, what's happening is there's always a trade-off. Most times with a fixed rate mortgage, the trade-off can be you can't come out of that particular mortgage unless you're paying either at least a 3% higher penalty, so a 3% of the balance of the mortgage. Another one which I'm not going to sugarcoat it, I don't like this product at all, is there's a bona fide sale clause in this particular mortgage. So what that means is you can't actually come out of this mortgage without selling your property.
Wow, that's pretty onerous.
It is, and oftentimes you don't realize or you don't think you're going to sell the property. We're in this for 5 years. Everything is going to be honky-dory for 5 years. Well, sometimes there's, unfortunately, illness, there's job loss, there's separation or divorce. These are things that we, obviously we don't foresee. But statistically, anybody that goes into, or people that go into a 5-year fixed, there's over 70% of these particular clients that actually come out of the mortgage within 3.5 years.
Ah, wow, that's a big percentage.
Exactly. Now, when you're talking a little bit of a difference in the rate, I'm talking about 0.05 or 0.1%. So it's really, really important to understand what the trade-off is. What dollar value, what does that actually mean to you to pay that 0.05 or 0.1%? So generally at the end of the 5 years, it really is only a few $1,000s. And to me, a few $1,000s, I would rather pay a few $1,000s than no, I can't get out of this mortgage unless I sell my property.
So a few $1,000s just for the flexibility of
maybe
getting out of it, or at least it's not as onerous if you do get out of it.
That's right.
Because it's really hard to predict what's going to happen in 5 years.
It really is. And, life has a way of throwing curveballs every once in a while, and if you haven't had any curveballs, that's awesome. But pretty much everybody I know has. So, but with that being said, there's always a variable rate option, which is very good as well. So with variable rate, your penalties are really only 3 months.
3 months,
penalty. But again, in a variable rate, low rate basic, we'll call it, or lowest rate product, what you'll want to look out for is, again, that bona fide sales clause where you can't get out of the mortgage unless you're selling the property. One last thing I want to mention as well with this is porting. So even if you've got this, if there's any type of extra restriction, if you want to call it that, but they tell you that your mortgage is still portable, what you're going to want to ask is, are there any penalties or costs associated with porting from, again, one property to another? If you have a standard 5-year fixed, there generally might be a $200 or $250 application fee. Most lenders don't even charge that. Some do, some don't. That's neither here nor there. But they're, again, in a no-frills or low-rate product, sometimes they charge you a penalty just to transfer from one property to another. So again, you're paying to come out of the mortgage. Even though you're staying with that particular financial institution, I don't really like that option.
Yeah, it sounds, again, very onerous, and it's just hard to predict what's going on in the future. So you just want the extra flexibility.
Yeah, I agree.
So then if somebody is, for example, looking for the lowest rate in the county, what do you recommend that they do? Say, hey, Lucy, I want a mortgage, what's your rate? What should I do? I guess if you have more consultation, try to figure out what their actual situation is.
That's exactly what I do. So I want to know about what you like to do. Do you like to travel? Do you have kids? My kids danced, played hockey, and my daughter rides horses. Those are ridiculously expensive.
Those are not cheap.
They're not cheap at all. Do you want your child to go to private school? Or do you just want to drive really fancy cars?
Yeah.
Right? Like do you want to wear designer clothes? These are all things I don't believe anybody should be house poor. I really don't. And so these are things that I would definitely ask. Things about your lifestyle. Where do you see yourself in 5 years? How much equity do you have in the property? Because oftentimes we don't really realize we've got as much equity as we do. We can use that equity for investment. We can purchase additional properties. Right. There's so much that you can do with equity. That I wouldn't want to see somebody for a few $1,000s over the 5 years restricted to something that they can't get out of, or is going to cost them extra money to get out of.
Yeah, that's a lot of great information. So I just want to quickly summarize then. So if you're looking for a lowest rate around, there's nothing wrong with that, of course. You can save money on interest. But just make sure that you understand all of the fine print and all the paperwork involved there, just in terms of the penalties that it will take for you either to port the mortgage out or to get out of the mortgage and that kind of thing. Because it may not always be about the lowest rate. Sometimes it's just about life flexibility, because you never know what life's going to throw you.
That's exactly it.
All right. Well, until that, if you need anything about mortgages, just talk with Lucy. Anytime. All right, talk to you later.
See you later. Bye-bye.